But if you do it through the Discord, it's not delayed. Do it through the Discord real quick. I just want
Okay,
to.
I'll do it right now. Just a second.
Okay.
Slash market tide.
Yeah.
Here it is.
Yeah. So you see, boom, they're selling calls. You can get into puts like right now and scalp. Let's see. I'm gonna do a watch list. I'll do paper trade. I'll do a paper trade for puts.
So you would now basically buying a put on the SPY.
Yeah, I would buy a put and I would test it. Let's see. SPY. Let's see. Put
So now it's trading at 777. Okay.
710 put at 126. Let's see if it pays. Because they are selling calls pretty hard. You see how calls, look at my screen. You see how calls is down here and price is up here?
No, I don't see you. I just see the market tide.
Yeah,
A
yeah, yeah.
second.
No, that's what I'm showing. The market tide. You see my screen?
No, I don't see it right now.
What about now?
Uh, I just see my.
Okay, hang on.
I'm on Discord. It's not shared because.
All right, hang on. All right, what about now?
Now you're back. Yeah.
Okay, so I pull market tide, right? Market tide. Okay, then I press enter. Okay, here it is. Now you see how the premium is way down here
Yeah.
and the price is up here?
Yeah.
That is the price to premium gap. You see there's a gap.
Yeah.
You understand? So that is why I watch list puts for a paper trade. From here, I expect the price to go down to here. Now, what is the price on the y-axis if it's down here? What price is it?
709. Yeah.
Yeah, 0.6, 709.6. So that would be my target. If price can catch up to the premium at what, 709 point what, 6, then that would be a good target, right? So what is SPY at right now? Let me see.
It's already at 7.9.6560. Already there right now.
Yeah?
Yeah.
Yeah, there it is. 709.6.
It was too quick.
It was quick, bro. But remember, I already added the contract. So let's check the contract. Do you remember the contract?
No.
No? Okay. Let me check. Hang on. I want to go back to market tide. I'm gonna pull out my phone right now and check. Maybe we're up 20% on the paper trade. You see the gap? You see it?
Yeah. Correct. Yeah.
It closed. You see? So
Yeah.
pull it in the Discord really quick. Let me know. Pull it. Go. Pull the market tide in the Discord. Let's see it. Can you go? Look, 33%. There it is.
So where do you have it?
The puts are up 33%, 37%.
Through what platform are you putting the trade?
Robinhood, it's on my phone. Just on my phone.
Okay.
Yeah. But I'm saying let's look at the difference now. So go to the Discord and use the bot to pull the market tide. I wanna show you the difference between the gap.
Yeah. Just a second.
Wow. Beautiful. Beautiful. That was so good.
Okay. You see it?
Did you pull it?
Yeah.
Yep, you see that? The gap closed.
Yeah.
Boom.
Exactly.
Beautiful. That's the price to premium gap, right? So before we pulled the market tide, you see that premium is outpacing price. Once you see that premium is outpacing price, you want to look at the y-axis, and that'll be your target for price. Price right now is at 710.4 in this image, but premium is at 709.6. One of the reformed approaches to trading that I use unusual whales to form is the relationship between data on a x-axis and a y-axis. So again, we looked at SPY, right? So let me just go over it, right? So at 7 a.m. Pacific Standard Time, we looked at SPY and we pulled the market tide using the unusual whales bot. Once we pulled that market tide, we were able to see that traders were exiting calls at a faster rate than price is falling. Once we saw that traders were exiting calls at a faster rate than price was falling, we noticed that there was a gap between the positioning of traders and where price was actually positioned. By using a reformed approach in the theology of how data is plotted on a X and a Y axis, we were able to notice that, hey, net call premiums are positioned lower on the Y axis to as low as 709.6, while price was still trading at about 710. So we anticipated that based off of the price to premium gap theory, the price would then catch up to the positioning of the premium, which would put price right about 709.6. And lo and behold, the next 2 minutes actually, we were able to pull price again, pull the market tide again using the unusual whales bot. And we were able to see that price did indeed close that gap down to where premium was and united actually with premium trading in tandem at the level of the y-axis at which the premium was positioned, which is the 709.6. So there you have it, a beautiful manifestation of the price to premium gap theory. And then